So last week we were talking about the things you need to know when buying a house, and I mentioned that there is one thing you need to know, and it's a big long list and needed its own video. So that's what this week is about. What are the expenses when buying a house? Let's find out. Hi, I'm Geoff White, Realtor with RE.MAX Eastern here in Picture Perfect Peterborough and the Kawarthas. And this week, we're looking at what are the expenses when buying a house. Number one on that list, your down payment. Now, this is the money that the bank wants to see that you have in cash. They want you to have some skin in the game, to use the old expression. And the minimum down payment here is 5% of the purchase price. So if you're buying a $600,000 home, 5% would be $30,000. Next on our list is the deposit. Now this is money that is given to the seller to show them good faith. It's a sign of good faith. You're saying to the seller, we're serious about buying your home. Here's our money. Now, of course, the sellers don't actually get the money. It goes into the real estate brokerage's trust account and it stays there until closing when the keys change hands. Keep in mind that the deposit is actually part of your down payment, and here's how that math works. So if you're putting 5% down on your home, that's $30,000 on a $600,000 purchase. And let's say you're going to offer $15,000 as the deposit. Here's the math. $15,000 for the deposit, and you can see $30,000 total for the down payment, which means when it's time to close your home, you're going to have to come up with another $15,000. Next on your list are inspections. Home inspection and maybe a wet inspection. Let's start with the home inspection. Typically, they cost between $350, maybe $400 plus HST. A wet inspection is a wood energy transfer technology certification, and this makes sure that your fireplace and your wood stove are safe for you to use. Typically, they cost between $150 and $200. The appraisal fee is usually between $350 and maybe $500. And this is a fee charged by your financial institution because what they do is they hire an appraiser, a third-party person, to go out and put a value on the home so that they know if they have to sell it, in other words, you've defaulted on the mortgage and they have to sell it, then they're going to get their money back. So that's the appraisal fee, somewhere between $350 and $500. Mortgage loan insurance is required by your financial institution. In fact, it's required in Canada. It's not just your financial institution. If you are going to put down less than 20% of the purchase price. So if you're doing a 5% down payment, you're going to need mortgage insurance. The two big providers are C.M.H.C, Canada Mortgage and Housing Corporation, or Genworth Financial. You can see from this chart that I'm putting up, if you're putting down 5%, your mortgage insurance is going to cost 4% of the mortgage value. Next, a survey or title insurance. Now, there was a time not that long ago, maybe just 15 years, where a survey was always required. Your financial institution wanted it because it is the best way to identify that this is the piece of property that you're purchasing. But along those years, in the last 15 years, along came title insurance. And the financial institution said, you know what, title insurance will do just fine. And here's why it came along. The cost of a survey is somewhere between $1,500 to $2,500, depending on the residential property that you're doing a survey on. And there are lots of folks who say, you know what, that's just more money than we want to spend. There's got to be a better way to insure title than that. And so title insurance came along. Hey, speaking of lawyers, next on our list of fees are the legal fees. Now, there is a long list of things that your lawyer does on your behalf, and here's just a sample of them. I'm putting them on screen for you. So there are a lot of things being done by your lawyer. Typical legal fees start around $900 for your lawyer. on the buyer's side, and they can range up from there. Land transfer tax is next on our list, and it's a tax paid to the province when you purchase a property. In areas like Toronto, there are actually two taxes, the land transfer tax that goes to the province and one that goes to the city. Here in Peterborough, it's just the land transfer tax. Now, it's a rather complicated calculation, and here's a look at how that calculation works. I have a much simpler way for you to do it though, and that is to go to my website, geoffwhite.ca/buyers/calculators/ and you can use the calculator to estimate your land transfer tax there. Homeowners insurance. Now, this is arranged through an insurance agent or an insurance broker. They will walk you through the various coverages that are available to you in the different policies. There are things that your financial institution is going to want for sure, like fire or total destruction insurance. They want to make sure that if something happens to the home, that it can be rebuilt so that the mortgage is protected. There are other things you consider though, right? So I mentioned fire, water damage, damage from storms, liability insurance, theft insurance. Those are all things you can talk about with your insurance agent or broker. Property tax. Now, this is paid to the municipality you live in. So if you're in the city of Peterborough, you're paying your tax to the city. But if you're in one of the townships outside of the city, you'll be paying it to that township. And each area to which you pay the tax has their own tax rate. And here I'm going to put it up on screen. This is the tax rate in the city of Peterborough, and you can see it's a big long decimal number. So how do we reach or arrive at what you pay for taxes? Well, there's an organization called M.P.A.C, the Municipal Property Assessment Corporation, based here in Ontario, and it's their job to put an evaluation or an assessment on each property in the province. So you take your M.P.A.C assessment and you multiply it by the tax rate in the city or wherever you're paying taxes, and that tells you what the tax amount will be for that year. Now, it's important to remember that the M.P.A.C assessed value of your home has nothing to do with the purchase price of your home. Two very different things. As always, if you have any questions, drop them in the comments below and I'll be sure to get back to you. And in the meantime, if you want to know more about buying a home, check out this video. And if you're thinking about selling a home before you buy your home, I suggest you check out one of these videos. Remember, I post new videos every week about buying, selling, and living right here in Picture Perfect Peterborough. I'm Geoff White, Realtor with RE.MAX Eastern, and I'll see you right here next week.